Hello traders, the title of this video is Fibonacci Trader explains the 150% Fibonacci extensions. Well, we are on a monthly chart of Extant Medical Holdings Incorporation, the APXXTNT, Israel Tango November Tango. Extant Medical Holdings Incorporation belongs to the healthcare sector, medical devices, and we want to talk about a Fibonacci Trader explain the 150% Fibonacci extension. All right. In fact, the 150% is not a Fibonacci number as such, but Fibonacci traders use the 150% level as a Fibonacci level. But remember that 150 is not a Fibonacci number, but traders use the 150% as a key Fibonacci level. All right. So let's get to the explanation of the 150% Fibonacci extension level. It's a very, very powerful Fibonacci key level. I will call it, in fact, the forgotten Fibonacci extension level. Now, if you ask a lot of traders, all right, what are the Fibonacci extension level, they will tell you 138%, 138.2%, 161.8%. They will tell you 214%, 261%. They will tell you 314%, 361%, and so on and so on. Those are the popular Fibonacci extension levels. All right, there is a playlist at the Day Pro Trader YouTube channel about Fibonacci extensions. All right, so check it out. But only few traders, okay, use the 150% Fibonacci extension level. It's in fact a very powerful Fibonacci extension level, and I recommend to traders to use it. All right. So talking about explaining the 150% Fibonacci extension level, I have some line that I draw on my chart. So you can see here, so you see the arrow here coming down. So the starting point of the arrow, that's what we call 0. The ending point of the arrow, that's what we call 100%. So when we are drawing a Fibonacci extension, you can see that the starting point, that's what we call 0, and the ending point, that's what we call 100. And then we start having the extension 138.2%, the 150%, 161.8%, and so on and so on. All right. So from here to here, that's the 100%. So from 0 to 100%. So I divide it into 2. All right. So that section, the top half is 50%, and the lower half is 50%. Now, if the price goes down, all right, pay attention, price goes down from A to B, which means from 0 to 100%. And then what usually takes place, you will see that the price after going down, so the price going down from one resistance level to a support level. Okay, and then it will try to rally up again to another resistance level. The psychological resistance level is usually the 50% Fibonacci retracement level. So what you will often see on your chart is that the price will go down from A to B and then rally up to point C and then start going down. And from that point, we'll apply Fibonacci extension. So suppose, my friend, you are playing a game, all right, and you have won $100, okay? So you won $100, you are very happy. Now, how would you feel if the next play you lose $50? So you play one time or two times, you have your $100 profit. Now, the third time that you are playing, you lost $50. Now, that's 50% of your gain already gone. Now, psychologically, you will try to fight back, or you may decide to go away because you know that, oh, I had $100, now I have $50, I need to be careful. Now, it become a bit tricky, it become a bit, okay, it will start affecting you if you drop below that $50 that you already have, because it's psychological key level. So the 50% level is the investors use it. So you will see here on my chart, okay, the price went down, okay, from here, that's what we call 0.0 to 100%. The 100% level is the support level where the price bounced up. Okay, so here you see it went down from here to here. Now, if we put some line here, you can see that this is what's going on in the financial market all the time, because it's about human being, how they react, okay, when they win and when they lose. So here it is, so price starting here and ending here. So you will see that if we divide see this channel here into two, the 50% is here. So the bearish traders that showed it here, if they manage to keep it all the way to this support level, we can say that's 100% win, all right? Then what's happened is that they took back 50% of their profit. Some of them, it doesn't mean that they lost 50%. It means that they secure 50% of their gain. But among those traders that sold it here, all the way down here, some of them did not take profit when the price was at this point here. So you have to understand that those who sold it here, the smartest traders, as they reach the support level, they take profit. And by taking profit, bearish traders taking profit, they must buy. So that pushes the price to the 50% level. But suppose you were selling here, but you did not take your profit as the price was here. So as those first, okay, those smart bearish traders are taking profit, you are still in the market, but you think that it's going to go down more, and you leave it as it goes to the 50% level. So now, this is what we are talking about. You have 100%, now you have 50% because you did not take your profit here. Psychologically, you want to fight back. So this is the fight back here that is taking place. Bearish traders want to sell it back to the beginning, all right? Because they have given away 50% of their profit. Some of them who did not take their profit here, they have given away 50% of their profit. And now they want to fight back, and they succeeded to take profit, to push it back to the beginning. And as the price reaches this level, you can see that some of them will take profit again because they say, I'm better secure some of my gain. I don't want to give back 50%. So remember that the 50% is a powerful, okay, 50% Fibonacci retracement level. It's a powerful key level, psychological powerful key level that is affecting the market. So as the price dip below, so you remember how we started talking about basic technical analysis, break below, retest, turn around, break above, retest, turn around. So the price back again to the starting point here, you see, where it ended before it was here. So now we want it to break below that level and to retest it here. Basic technical analysis. And people sold it again. Now they sold it, look what's happened. So those who sold it here and took profit here are very happy because who took 50% of their profit, they did not take 100% of their profit. So they have $100, okay, a profit, all right. Now they secure 50% of those profits. They still have on the table 50%. They haven't lost them, all right. Now they sold it again here. So as the price come back here, those traders have 150% profit. Do you understand here? So from here to here, that's 100%. Okay? So they sold it here, it bounced up to here. If they sold it again here, and the price come back here, those smart Fibonacci traders have 150%. But among those Fibonacci traders, there's another group. If you sold it here, and you did not take your profit here, and the price bounced up here, all right? And you manage to sell again here, and price come back here, you only have 100% of your original profit. But another group that is more smarter than you has 150% profit. Are you getting the message? Now, price break below that key level, retest it, they start selling. So remember that in their mind, that 50% is so important for market participant. So now, as they sold it again here, which level are they watching? They are very, very happy market participants, Fibonacci traders, if they can manage to push it down all the way to the 150% profit. So at this point, here we are, you can see now that this stock that we are looking at is exactly at 150% Fibonacci retracement level. Here it is, exactly on that level, 150% Fibonacci extension level. Can you see? That's where we are now. It's a psychological level. So those who, the first group that is too small, if you see now here, if they have 200% of their profit so far. Because they sold it first time from here to here, that's 100% profit. Now they sold it from here to here, that's 50% profit, that's 150% altogether. Now it breaks below retest, then they sold it again, now we are again at 150%, they have 200% profit. They have doubled their original profit at 150% Fibonacci extension level. All right? This is what's going on. So look carefully, my friend, look carefully. As the price D below, okay, what we are calling a 100% level, break below, retest, look, price start going down. Look what's up, look what's happening. Price went down, boom, 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 hit the 138.2% level. Some traders took profit. Again, a bounce up, okay, and then again, people continue to sell, break below, retest it around. So I want to bring the awareness of the 150% Fibonacci extension level. It's a powerful Fibonacci extension level. So the trick that you can use, talking about practical Fibonacci trading, all right, the trick that one should use, so because a lot of Fibonacci traders are only watching the 161.8% level, which is the line below the pink line. You can just wait for it to go all the way down below the 161.8% level. Usually you will see sometimes a reversal will take place in this zone between the 150 and the 161.8% Fibonacci extension level. This is another forgotten sweet spot zone for a reversal. You remember the first sweet spot zone that we were talking about before? If you are a subscriber of Day Pro Trader, you should know now. It's the zone between the 50% and the 61.8% Fibonacci retracement level. So you can see that, look carefully here, as the price goes down from here to here, the first sweet spot zone is between what? The 50% and the 61.8. Look, 50% and 61.8% Fibonacci retracement level of the move from here down to here. That's the first sweet spot zone. Now, should we call it sweet when they are selling also, or should we call it beta? Now, I asked the question before. I did not see any comment below. So they are selling. Most investors will say beta spot sweet, beta spot okay, trading zone. All right. So here it is. So the untold or the forgotten, all right, secondary sweet spot zone is between 150 and the 161.8% Fibonacci, okay, extension level. So the first sweet spot zone that everybody else knows is between the 50% and the 61.8% Fibonacci retracement level. The secondary or forgotten, okay, a sweet spot zone is between the 150 and the 161.8% Fibonacci extension level. So what I'm trying to do here to explain to you the psychology of the 150% Fibonacci extension level, all right? So 50%, so you have 100%, you have $100. If you lose 50%, you have $50. You're not happy. If you go below that $50, suppose you have $100 and you end up in the next play you have $40. Now you are under pressure because you lost 60% of your gain. You are not a happy person. All right. Now most people will come out straight away. They say, okay, I have $100 now. I lost 50%. I think most people will just go away and say, okay, I'm going away now. I start losing now. I lost 50% of my gain. It's time to go. All right. Another group may say, okay, it's time to fight back. So they say, I came with zero. I have 100%. I'm willing to lose all, which is also stupid. But sometimes they are rewarded if they know how to control the risk. And it's happening in the financial market. This is what's going on. Had a 50%, and they push it down to the beginning again, and then play below, retest again. Next level, 50%. So what can we do? So I talk about the forgotten sweet spot Fibonacci trading zone. So what we can do with this information is that if a financial instrument, now we are using what we like to call a market stable data, okay, that you can apply on any time frame trading, okay, the price action alone, all right? Okay, hold on a second. Let me write something down here for myself. So suppose a financial instrument goes up from A to B, all right, from A to B, and then it reaches a resistance level and pull back a bit without coming to the starting point. All right. If the price goes above, okay, the prior high, okay, prior high, which is this one here, all we need to do is to highlight the range of the first price action. So from here, we will highlight it and we divide it into two. Very simple. And then we project the half, the height of that half, okay, in the direction of the price. So with that, we can just apply Fibonacci extension to each price move from A to B. Anytime price move from A to B and pull back, we apply Fibonacci extension to it, and then we are watching which level? The 150% Fibonacci extension level. Then we project it up, we pull back again, we project it again, and so on and so on. All right. So as you can see, price goes down from A to B, so from 0 to 100%, talking about Fibonacci numbers, all right? Rally up to 50%, this is what usually happens, all right? And then pull back. Right below this low, we are watching a 150% Fibonacci extension level. Very often, one will notice a reversal between 150 and 161.8% Fibonacci extension level. But remember that what we are looking for is for the price to dip below that 150 and to tag the 161.8% level and then come back above it. Some trader will jump and buy straight away here. That's not the best way to do it. The best approach is to consider that as a trading setup and then use a multiple time frame trading method to control the risk. Without a top-down trading method, we are not trading like a pro. All right? So this is about, okay, a Fibonacci trader explain the 150 Fibonacci extension level. If you have any question or suggestion, all right, put in the comment section, and in due course, I will be recording another video to answer your specific question. As you can see, Estan Medical Holding Incorporation is now 150% Fibonacci extension level. All right, there will be a kind of profit taking, some reaction here because it's a psychological Fibonacci extension level. We are the TSTW24 traders talking about Fibonacci trader explains the 150% Fibonacci extension levels. Happy trading to you all and speak to you soon.